Today, like I said, I will take you through the earnings call of a fintech company, Marqeta, and this would be the earnings call of the fourth quarter of 2021. But before going into what details were discussed during the call, I would like to give an overview of the company. So this company, Marqeta, was founded in 2010, and they had an IPO very recently in June of last year. So what the company does is it provides an API platform to issue and process card payments. So that is basically they provide the software infrastructure to issue and process card payments. Okay, and company used this Marqeta platform to launch and manage their payment card programs. So any bank, let's say for example, right? So I have listed a few examples over there, which are JP Morgan, Affirm. Then there is another company called Block. So these firms have their own branded credit or debit cards, right? And when customers use these cards, there is a lot of the transaction mechanism that goes on in the back end, the payment settlement. So from the time the card is swiped at the POS terminal till the time the amount is settled with the merchant or debited from the customer and then settled with the merchant. So all of those operations are enabled by the software at the back end, and Marqeta basically develops this software and sells it to companies so that they can use or they can run their transactions on that platform. Okay, so that's what.
Sahi, just to so basically just to confirm, so they compete head-on with Mastercard and Visa. Is that
Yes.
right to say? Yeah.
Yeah. So that is what I mentioned here. For the card networks and issuing banks to issue cards, authorize transactions. So yeah, in a way, they're like the Mastercard and Visa, where they use the software infrastructure to facilitate these transactions.
Great.
And so one other thing that they do is they provide customers with a dashboard for them to explore card data, manage users, create cards, and so on. So this is what their dashboard looks like. So any user, let's say for example, JP Morgan, right, who issue cards based on the Marqeta platform, so they will have the facility to look at this kind of a dashboard. So this shows key metrics such as the amount of money that has been authorized and settled. So that is what has been shown here, settled authorization, and then the number of transaction, average transaction value, and then the trend of authorizations. And customers also have the options to view the other details such as the transaction or authorizations detail, and then balance details and settlements or clearing details and so on. So this is another service that they provide to customers. So now we come to the key metrics of the fourth quarter of 2021. So their total processing volume, if you see, was $33 billion, and this was an increase of 76% over the total processing volume or the gross processed volume for the previous quarter. There is the previous quarter of the same, of the previous year. Same quarter of the previous year. That is what I mentioned here, year-on-year growth. And the total processing volume grew by over 400% over the past 2 years. That is from 2019 to 2021. And the interesting thing here is that more than 10% of this total processing volume was contributed by the buy now, pay later construct. So this is actually, this growth that we see here, the growth of 76% in the total processing volume, as well as the growth of 76% in the net revenue, is a little bit higher than what we have been seeing for the other fintech companies. So for example, for Visa or Mastercard, we saw growth in the range of around 30 to 40%, but this is in fact much higher than that. And their gross profit also grew by 108% year on year. And the main reasons for growth are they state as these ones, basically the increased customer spending in the holiday season, and also the buy now, pay later. And one other thing what they mention is the stronger volume mix. Now how does volume mix impact growth? This is because different transactions, domestic or foreign exchange transactions, they have different rates, So typically foreign exchange transactions have a higher rate than the domestic ones. And if the foreign exchange transaction mix goes up, then it is very much likely to contribute an increase in the revenue. So this is what they state as reasons for growth. So whatever we saw here are metrics for the last quarter.
Sorry. You meant these the reasons for growth of profit or volume?
Volumes.
Volume. Okay. No. Okay. You meant stronger volume mix. Okay. Fine. That's all. Okay. That's fine. Please go ahead.
Yeah. So these are the metrics for the entire year of 2021. So their transaction total volume of money transacted on the platform was $111 billion, which was a growth of 85% over the previous year. And their net revenue was $517 million, which is a growth of 78% over the previous year. And their gross profit grew by 97%. And they expect the revenue growth for the first quarter of 2022 to be at 48 to 50%. And they expect their TPV to grow at 40%. So they have also established partnerships with other banks. So the first one is they have partnerships with Goldman Sachs, JP Morgan, and Citi. And especially, so for Goldman Sachs and JP Morgan, these partnerships are part of their strategy to grow their customer base. With Citibank, it is a little bit different. So they offer this tokenization as a service for mobile wallets. Now, this tokenization is a process where whatever data you enter, right? So in your bank account details and whatever information is contained in your bank account, the transaction and the bank balance and so on. So all of that data will be encrypted and masked from unauthorized users. So that is this process of encrypting all of your information is called as tokenization. And this tokenization is a key part of fintech companies and other financial institutions today because it is a very fundamental component of data security and privacy. So this tokenization is provided as a service by this company for Citibank, and this is for their mobile wallets service. So they have partnered with another fintech company called Klarna. So Klarna is a payments processing company. So they have partnered with this company to expand into 13 new European markets, and they have launched a partnership with the First National Bank of Omaha to quickly design and launch credit card programs. And they also have a partnership with Plaid. So Plaid, I believe we have discussed in a few previous sessions as well. So Plaid gives a way for you to integrate your bank account information quickly so that your KYC and all of these details are processed without delay. So they have partnered with Plaid for seamless authentication of bank account details and enabling quicker transactions. The next point is basically again something similar to what a lot of fintech companies are doing today, where they are trying to expand their network in the domestic markets. The developing markets. So they have started issuing cards in Philippines, Thailand, and Singapore. So Philippines and Thailand. So Singapore, of course, is a developed economy, but on the other hand, Philippines and Thailand are considered to be very big, high growth markets with a lot of potential. And here, the adoption of digital payments is less than 50%. So there's still a long way to go before the digital payments market is to be saturated. And this company, Marqeta, would like to have that first mover advantage, and that is why they have partnered with banks in these countries to issue their debit or credit cards. And the younger populations are also urbanizing steadily. So this urbanization, large-scale urbanization that is happening with this tech-savvy population also presents a very good opportunity for growth. And again, to leverage on the growth that they have already achieved via the buy now, pay later channel, they have partnered with this company called Cecil. So all of these partnerships were signed over the last year. So this was what I was saying when I was talking about the strategy. So they follow this kind of a three-pronged strategy. So the first point is they would like to grow their customer base, and this is mainly via the established financial institutions. So this is where we saw the partnerships with the JP Morgan, Goldman Sachs, and Citibank, right? So these banks already have very large customer base, and by partnering with these banks, Marqeta is able to extend its reach and grow its market share. And the next strategy that they follow for growth is offering more solutions. So this is in terms of not just the physical credit or debit cards, but also the digital banking and the wireless money transfers and so on. And the third one is basically supporting more verticals or more payment constructs. So this is where the buy now pay later, expense management, and other forms of digital banking, such as the wallet-based transactions and all those things come in. And this is how they plan to do it. So they choose countries where they expect high growth in cards and overall payments. So we saw in the previous slide that they started to issue cards in Philippines and Thailand, right? So these are developing markets and high growth markets. These countries or these geographies form a very important part of their strategy. And they plan to identify verticals early and build unique technology to support them. So for example, cryptocurrency is one up and coming vertical which they have identified. And with regard to this, they have established a partnership with this company called Coinbase to enable cryptocurrency transactions via the Marqeta API platform. So this is one part of the strategy that they follow. And so this was what I had on the Marqeta earnings call. Any questions on this before we move to the next topic? Okay, we move on to the next slide. So now I will move on.
Sorry,
yes,
I was on mute actually.
Yeah.
So I'm just trying to understand like the business model of people like Marqeta, a company like Marqeta. So if we take, let's say, normally, let's say, if they're payment processing company, they charge an additional fee. Do they also here charge with all their partners whom they're providing the service?
Yes.
on per transaction basis, or is it like a separate subscription fee that these partners have to pay, like wholesome amount at a yearly level or something like that? I'm just trying to understand that.
Yeah, I guess the exact nature of the contract would depend on the type of the customer, because so for example, if you see here, they partnered with a lot of companies, not just the traditional financial institutions, but also with the fintech companies and the buy now pay later companies and so on. So the nature of the partnership, as to whether it is a subscription based or whether they charge on a per transaction basis, probably depends on the company, because when we talk about transactions, it's like for different transactions, the charge comes different, and the technology that enables the transaction could also be different, right? So for example, here, one of the points that I have put, they on behalf of the credit card networks and the issuing banks, so they authorize these transactions. So when money moves from one bank to another, that network, one bank might be in one country, the other bank might be in another country. So I believe it's probably like on a per transaction basis rather than a flat subscription kind of a piece. Or the subscription model might probably exist, but maybe for a different set of companies. I don't know exactly which ones.
Okay, got it. Okay, understood. Thanks, Sai.
Okay, any other questions? All right, okay. So now let me move on to the next topic for the day, that is the Net Promoter Score, or the NPS for short. So this Net Promoter Score was a metric which was originally defined by this company called Bain & Company, which is a management consulting firm. And the NPS essentially provides you a way to measure customer satisfaction, okay? And it is also a way to assess the organization's potential for growth, okay? So typically when we talk about NPS, this NPS score is based on a survey, okay? And that survey almost all of the time has this question. So on a scale of 1 to 10, how likely are you to recommend this product or service to a friend or colleague. Okay, so the fundamental idea behind this is that if you recommend you're using a product, and if you recommend it to someone you know, then you're a promoter. If you say this is not a good product to use, then you are called a detractor. So that is how based on the rating that you provide, people are the respondents are classified into 3 types: detractors, passives, and promoters. Okay, and this is how the NPS score is calculated. So let's say, for example, there is a survey where there were a total of 100 responses. Okay, and out of them, 75 of them were promoters. That is, they gave a score of 9 or 10. Okay. 20 of them were detractors, which is to say that 20 of them gave a score of less than or equal to 6. And 5 people out of the 100 were passives or neutrals. So they gave a score of 7 or 8. Okay. So if these are the numbers that we have from the survey, then we calculate the NPS as follows. So number of promoters minus the number of detractors divided by the total number of responses, which is the 75 minus 20 divided by 100. So we do not consider the neutrals anywhere in the formula over here, because neutrals neither promote the product or nor dislike the product. So we do not consider them in the formula. So we just consider the promoters minus the detractors divided by the total number of people who have responded to the survey. So here, based on this data, the NPS, we will say that it is 55%. Okay. So just a bit more, to elaborate just a bit more on the NPS concept. So this data that I said, right, the customer response data, that is usually collected using a predefined survey, which is sent out via certain platforms such as Qualtrics or SurveyMonkey. So there are several platforms available, but these two are the most commonly used, Qualtrics and SurveyMonkey. And like I said, the respondents are classified into 3 types based on the score that they provide. Okay, and if the score is 9 or 10, we said it's a promoter, right? And these promoters are basically the most loyal customers who are enthusiastic about your product or service. Okay, and this enthusiasm translates into their good word of mouth about your product. So that is the recommendation for the product. And then the next category is the passive or the neutral people who are indifferent to your product or service. So they neither give a positive opinion nor a negative opinion. And the detractors, that is the people who have scored the product less than or equal to 6, are the unsatisfied customers. So these are the people who give the negative reviews about the product. Okay. And so these are like the industry benchmarks for the NPS. If the NPS is less than 0, so essentially if the detractors are more than the promoters, then it means that there's a lot of need for improvement. Okay. If the NPS is between 0 to 30, then it is good. If it is between 30 and 70, it is considered to be great. If it is more than 70, that is 70 to 100, then it is an excellent NPS. So any questions on this concept so far? Anything on the definition? Okay, let me move on. So why is this NPS important? So these are points that have been uncovered by people during research. Okay, so what people have actually found is that the lifetime value of a promoter is 2.5 times that of the lifetime value of the detractor. Okay, so lifetime value is essentially a very commonly used metric in marketing. So it is the full name of it is actually customer lifetime value. Okay, this customer lifetime value is basically when you have a customer who is likely to buy repeatedly from you and who uses your product or service for a long time, then what is the total value that you get from that customer? How much money is that customer going to spend with you during the lifetime or during the entire journey for which he or she is with the company? So that is what we define as the lifetime value. And what has been discovered is that the lifetime value of the promoter is 2.5 times that of the detractor. And the another important point is that the detractors are 2.3 times more likely to switch to another bank than a promoter. So this is in the context of the financial services industry, of course. This just goes to show how important NPS measurement is, because you measure this NPS, you get the number of promoters and detractors, and then this serves as an indicator for you to measure churn. Okay, because detractors are more likely to switch to another bank. Okay, and in the financial services industry, the average NPS is 44. So 44 falls into this category, that is the 30 to 70 or great category. And financial services institutions that have an NPS score higher than 60 are also likely to see a 26% greater level of growth in their operating income. So operating income is like the gross income minus the operating expenses, which is one form of the profit before the taxes and all the other deductions. So if the company has an NPS more than 60, then it is likely that the profit is 26% higher. Okay. So I told you that the average NPS for financial services is 44, right? But you look at this table here, so this gives the NPS for some of the companies that we have been discussing in the previous sessions, the fintech companies or the payments processing companies. For these companies, you see that the NPS is far lower. See, for TransferWise, it is 33. For Stripe, it's 29. Bill.com is 25. PayPal, it is 17. And Venmo, which is again a company which is owned by PayPal, the NPS is minus 50. It's actually negative. Basically, the detractors are more in number than the promoters. Okay, so all of these companies, almost all of them fall into this particular category, either the 0 to 30 good category or in the need to improve category. So they are not as good with the customer satisfaction score as are the traditional financial institutions. They still have a long way to go. But one other reason why we are seeing lower scores here is that this is a highly competitive space, and people expect the customer loyalty is very, very low, and at the same time the expectation of the people is very much high. For example, when we talk about payments processing company, the speed at which transactions are being processed, right? So all of those things come into play, and then the cross-border transaction pricing. So there are a lot of other complicating factors here, and those factors with the increased competition make the NPS scores for the fintech companies a bit on the lower side. So these are all points on the importance of NPS. So any questions? All right, so that is all I had for today.